Welcome investors! Today we'll be talking about market timing. Let's first answer the question, what is a market timing? So market timing is a strategy of buying or selling stocks based on predicting the future market price movements. The prediction may be based on the outlook of the market or economical and political conditions surrounding the market. It is commonly believed that all stock prices reflect all available information, and the prices of stocks are the most accurate all the time. This means that it is theoretically impossible to systematically beat the market. Many investors and financial professionals believe it is impossible to time the market. They consider market timing to be a form of gambling based on the pure luck, because they do not believe in predicting the future market movements. Other investors, especially active traders, believe strongly in market timing, and they use all kinds of mathematical analysis to trade the stocks. Whether market timing is possible is really an open question. What can we say with certainty is that it is very difficult to time the market consistently over the long run and do it successfully. What I would like to show you today is my market timing strategy. I want to show you this from the practical side, based on my own holdings in my portfolio. And I will also show you the times when I bought those shares. I don't want to give you here charts. I don't want to give you here numbers proving here that market timing works or it doesn't work. I don't want to give you here today empty talks. I will just show you from practical side what market timing caused to my portfolio based on the particular stocks I own. So let me take you back almost a year ago to the end of February 2020. This was the time when we had news about the virus breaking out to the mainstream media. Within a couple of weeks, this news started affecting all our lives in many ways and many forms. At the beginning of March 2020, you could feel the fear of an unknown started building up. We did not have any data and info on what we are facing up, but fear started building up more and more. Then suddenly, market started crashing. Boom! 10% daily, to the point that trading has to be stopped for safety reasons. Do you remember that time? It was not so long ago. Extraordinary times. S&P 500 went down 31%. Dow Jones went down 34%. All stocks went down. All commodities went down as well. Gold, silver, everything. That was a real panic. Investors were selling everything. Not many people was buying. Was that a good time to buy? Absolutely yes! The best time to buy anything. Even if you buy the most crappy stock back then, you could be a winner today. What did I do back then? I reminded myself the most important sentence in investing. Buy when there is a blood on the streets. And there was a lot of blood and slaughter going on in investing world. So I opened my wallet and started buying. And since I am very low intelligence creature and very strong minded, I started buying companies which did not need a lot of research, and it was inevitable that they were going to recover eventually. That is my advantage. Low intelligence, high character strength. And I will give you here example of companies which I bought in a panic of March 2020. So let's log on to my account and see how they are doing today after almost more than a year.
The first company which I would like to show you is Bank of America. And Bank of America I started buying in April. April 6, I bought 20 shares for $21. April 8, 100 shares, $22. April 16, 50 shares for $21. April 20th, 74 shares for $22. And May 19, 22 shares for $22. Total I invested 6,000 and the change, and as of right now this 6,000 turned into $9,383 and some change. So this is 53% return on investments. As of right now, the shares of Bank of America are $34. So the next company which I would like to show you is JP Morgan Chase. JP Morgan Chase I started buying in March 18. I got 10 shares for $82. March 20th, 80 shares for $82. Again March 20th, 90 shares, $82. March 23rd, 30 shares for $79. Total amount which I invested in JP Morgan Chase was $18,027 and the change. Oops, session is about to expire. Would you like to remain in the session? Yes, I would like to. Okay, so as of right now, the shares are worth $32,180 and some change, which is giving me 78% return on investment. As of right now, the shares of JP Morgan Chase are 148 per one share. And another company which I would like to show you is Wells Fargo. Wells Fargo I started buying in March 13, 2020. I got 73 shares for $28. March 20th, 130 shares for $26. March 23rd, 40 shares for $25. And I think this here, June and September, that are the dividends. And then September 29 I bought 100 shares, and then October 27 I bought another 100 shares for $22. So total what I invested in Wells Fargo is $11,205 and some change, which turned into $17,034 and some change. So the return on investment on Wells Fargo shares is 52%.
If you have to remember anything from any of my videos, I would like you to remember this. The worse off the market is, the better opportunities for profit are. Every couple of years, we have some kind of pullback in the market. You can find info on how many pullbacks we had in the market so far. It is listed in details what kind of downturns we had, and based on this you can figure out what you can expect in the future. It is inevitable that we will have pullbacks in the market, It is the nature of the market. You just have to be ready mentally. What do I mean by this? I mean, be ready to go against the crowd, swim against the tide, be a contrarian investor. And you have to be ready financially, of course. You have to have saved up cash. So when the time comes, you can deploy it quickly and start buying stocks at a deep discount. This is something which fascinates me the most in the entire concept of investing, because it is such a simple idea. You don't have to have high IQ. You don't have to be really smart. You don't have to follow the crowd when investing. It fits perfectly me. And in the end, people who are much smarter than me are pumping the prices of the shares which I bought during the crisis times. Amazing concept. You can do it too if you are a very simple investor like me. Someone else can pay for your shares to go up as well. Just remember, you have to be strong mentally and don't let the crowd influence you. And save as much money as you can. And don't listen to any talking heads every day on YouTube, because they just pollute your mind. Remember that guys on YouTube make money from just talking about how to make money. They do not actually make money from the stock market. Stay on the side. Watch for trends, and eventually you will experience pullback in the market. Then pick the good quality companies and start buying. This, what you just heard today, is not a strict market timing in the traditional way. Because market timing is when you buy and sell constantly. What I just told you is slightly modified market timing. And it is much easier to do than traditional market timing when you buy and sell constantly. Because you buy when the market is down and hold until prices goes up. It is much easier and less stressful. You don't have to follow the market all the time. No stress, no anxiety. That is what I like about investing. You don't have to watch the market constantly. You're watching the stock market from the space station. You can have a life and at the same time enjoy nice returns from your portfolio. Proper balance is necessary in life. Okay, this is it for today. Please write me down your comments. Positive and negative are welcome. Just explain your opinion. And in the description, you'll find 2 books which you have to read if you're serious about investing. Reading the book, when you read the book, you remember this to the rest of your life. When you watch everyday videos on YouTube, next day you don't remember anything. It is a pure entertainment. It's not engaging your brain. Remember about this. Reading books is the way to go. Watching videos is just a motivation. It's just a spark. Don't make watching videos main thing for you to learn how to invest, because it is a mistake. Thank you so much for watching this video. If you like this video, of course, hit the thumb up, subscribe to the channel, share this video with your friends on Facebook, Twitter. I really appreciate all your help. And like always, remember to take care about the most important asset in your life, which is your health. Thank you so much again. Have a great day.